Hello everybody, good morning. We're having a look at the S&P 500 to begin with because it seems to be the precursor to all the other markets. We're looking at the US 500, the pre-market basically, and we're now below the ascending channel. This rising channel, which they do usually break down, has begun to break down. Oh god, here we go. And we've got the 10 exponential, the 20 moving average as well below the channel as well, just to emphasize the fact that it's more likely to sort of just rain down now, to be honest with you. There was a chance, as we were talking yesterday, as we came down to the bottom of it, that we would move back up to the top before another rejection, because we were above, this daily Bollinger Bands, for the most part, we could have ricocheted back up to the 50. Unfortunately not. Unfortunately not. And so it looks now that we should be thinking about the measured moves on the way down. And we could probably even think about taking some shorts on this. So we're sitting at horizontal resistance. That's fine. Another horizontal resistance down here, 5,620. And then obviously these bad boys down here, 5,529. And then that is the bottom of the daily Bollinger Band, so you probably should be looking for some sort of bounce around those areas. At that point, whether we do a fake out, sort of wind our way back up towards 6,000 is a different story. Don't know. You have to keep our eyes on it. Really, we don't really know what the deal is until we see it. I would say though it's standard stuff. Really, in the absence of any kind of bull div, you're not likely to see that. Again, the 4 hourly seeing a rejection on the 50, and then obviously, we can see the increments on the way down. So what does this mean for everybody else? Well, I suppose it's obvious, isn't it, really? You can see it already. Bitcoin 4 hourly, we've moved up from this death cross, which was kind of painting a bit of a triangle formation. It's failed, obviously, and that's done and dusted now. What else are we going to be looking at? Well, I can tell you something relatively interesting, which, probably wasn't to be expected, given the nature of this downtrend at the moment, is that actually, somehow we've managed to get a simple moving average golden cross, which is where we're sitting at right now. Golden crosses do like to get retested, but again, just like we said with the S&P, in the absence of any kind of bull div, not really looking for any reaction on this. And exponentials are usually my preference. Simple moving average is not as good, especially on a 4 hourly. But we are having, and we do see a golden cross for what it's worth. Let's move it down a bit to the daily. What's going on over here? So we're sitting at the 200 simple and exponential, which in all fairness is part of a golden cross retest. You do see reactions around these areas in the past. So up, bang. This is all the way back down at the beginning of the bull market. Bang, bang. Turn around here is real messy, to be honest with you. And obviously there wasn't really much of a reaction here. We used it as resistance for the most part. But since reclaiming it, it is a support. But at the moment, we've got this area here, 85,900, and then you've got your Bollinger Band itself, 84,000. So there's still support to be had on Bitcoin. There is still support there. But if the S&P wants to come down, everybody's going to come down. So this is S&P yesterday before the pre-market. So it's not opened yet, so that's the discrepancy in price. It's only minuscule, really, to be fair. As far as this is concerned, the trend is still up, but from what we see here, the trend is obviously looking way more likely to come down. So it's what we've been saying this whole time. Bitcoin can do and look however and present however it likes. If stocks decide the other, to present in a different way, then everything comes down, and this is where we've been now, what I'd say for at least a month, really. Governed by the stock market, really. Governed by the stock market. So, opportunities perhaps on the way down, perhaps. There isn't really what I would consider to be a bear market. The weekly, getting rejected on the 21, if we can stay above this 50, 77,700, excellent. That could easily be the low. But until we start to see some more reaction, I don't really. yeah, it's still the no man's land area, isn't it, really? And this is what we've been saying. The no man's land area exists between the 80s and the 90s, and then obviously you start to get more particularly bearish. If you start closing weeklies below 77,000, then you're like, all right, okay, that's where we do start coming down further. 71,000 would mark pretty much the last opportunity for any kind of major bounce and low, where we saw this previous high, not too far off from our all-time high of the last cycle, but we're going to start to split hairs at that point. I've not been doing any futures trading throughout this period. I've just almost just ignored crypto. Really, look at it in the morning, give my my general views and expectations, but not convincing enough to take a position in either way. And I think with all this chaos in the market, just generally speaking, it's hard to really pick a particular direction that you really want to put money on. Obviously, I still like, heavy in crypto. I still got plenty of crypto, but as far as going crazy on trades, I'm like, not really feeling it. Not really for me right now. I'll just sit back, watch and wait, and allow for either this resistance to break or this support to break. At the moment, fannying around in this kind of area is what it is. But if I had to pick right this very moment in time, it does appear that the bears have got the upper hand, since we are losing this trend line, which previously was a rising channel, which it is almost guaranteed to break down. Well, I say guaranteed. It's about a 70% or more percent chance of breaking down, so the odds are always in favour of a breakdown, but we were hoping for at least one more rise to the top before a breakdown, and then you can take the increments, but we didn't get it. So maybe we bounce here, maybe we bounce here, maybe we bounce here, but the only real way for me to expect any kind of bounce, or to try to trade a bounce like that, would be to look at any kind of divergence, and we don't really have any, so without it, it's not really a tradable scenario for me. Because it's about statistical likelihood of success, isn't it, really? And as much as supports exist, divergences or switching around of momentum is not there. So if that's not present, the supports are less likely to hold. So 1, 2, 3, and then maybe a new low. Right, that is it. Thou shall leave it with you there. Nice way to move into the weekend, isn't it, really? We're a big washout. Big washout. Right, thanks for watching. I hope you have a nice day. Take it easy.